trial balance. So starting off with very basic junior cert stuff, probably started from first year. We have to produce a bank account. So that's the first thing that we do from the information that we have here in the question. So I'm dealing with Paddy from the cash account trial balance exercises. So first of all, this is a brand new business, and for this we're just going to ignore dates just for now. So this guy started the business with 10 grand capital. So our bank account shows money in, money out. So the debit side is the money inside, the credit side is the money outside. So when 10 grand is put into the business, that's on the debit side, we're getting more money. Same way when we earn money from sales, okay, so because there's two different sales here, okay, so those are put in on the debit side. And then the spending, so on the opposite side, the credit side, we have the spending money side, and we spent money on three different things. And then at the end of the month, we'll balance to find out how much cash we're left over with. So we have a balance here of 12,300. And the way this process happens, there's a separate video for this, but we add up the two sides and find the difference. So the difference is 12.3, which is added to the small side to make it as big as the big side. And then we bring that balance down to start the following month. And when we have new transactions, we'll be adding on to this 12.3 or taking away from this 12.3, and then we'll balance it again. And this one account will be continually balanced every month or every week, however often we want it. That's stage one, recording everything in the bank. Stage two then is entering it into a second account. So every time a transaction takes place, you have a debit in one account and a credit in another. So in this case, it's money in, money out, and the other account will be the reason why money came in or money went out. So I said a second ago, we always have a debit in one account, a credit in another. So I'm going to make an account called capital, sales, motor expenses, purchases, wages, and I'll put the opposite entry in here. So I've got capital account down here, and I have 10 grand in here, which is that 10 grand up there, and the word I put in details is the name of the other account. So the other account here is called bank. That's why I write in bank. And similarly, when I go and have a look at all of the other accounts, so sales, I had 4, 6 and 600. So that means that in the sales account, I'll have the same figures. And then I'll balance my sales account and I get a balance brought down, or BAL-BD for short, 5,200. Motor expenses, we notice that bank is on the opposite side than it was in sales and capital. That's because motor expenses was on the credit side in the bank account. So in the motor expenses account, it'll be in the opposite side. And again, we balance it. Okay. Purchases, wages, the same thing. Now, at the end, we have to produce a trial balance. So what we do is we take all of our balance BDs, which are all marked in red here, and we put them into this trial balance. So what we do is we write down the name of all of the accounts we've dealt with, and we take the balance BD and we put it in here. Okay, so we have in bank we had a balance on the debit side of 12.3, meaning that's the cash we have. We had money put in from capital, sales, okay, and all of those balances are wherever the balance BD was in the account, that's where they go in here. Now, if I followed my double entry rules correctly, that means a single like debit for every credit. If I've done that, when I balance all of my accounts and I add them up, I should end up with the same total figure. If I don't, then somewhere along the way I've made a mistake. That's the idea behind doing the trial balance. And then moving on from there, when we start thinking about naming accounts and how we do transactions, what we'll be doing is looking at what type of account each of these are. So for example, we would think, well, bank is an asset account. Capital is a liability account, money owed by the business back to the owners. Sales is an income account, away we got money. Motor expenses, purchase expenses, and so is wages. Okay.